Hi everyone, today is Monday, November the 7th, 2022, and I want to share some of my thoughts on where I think we are going with the commodities super cycle, or rather the beginning of the commodities super cycle. Like, a lot of people have been waiting for this, like, oh, it's about to break out, oh, gold just hit that, oh, silver's going here and there and everywhere. And that bit, people have been chomping on the bit since 2020. However, now what I'm seeing, and I made a video, I think 2 videos I made last year. I think they're called why I think a depression comes before an inflation. The other one is a Q&A that question and answer type session that I made in January, where in both of these I've spoken about how the depression comes before the inflation, and I said over there my only caveat is that if they go to war or if they do CBDC and then the next month the war began. But this view of mine is like, now people are seeing the depression that I already said was going to happen. But no, I told you so here. I'm just saying, like, I don't watch the news. I don't know what happens. I watch the charts. Like, there's an incredible teacher. He goes by the name Jay Bravo on YouTube. But he's a high school and college business teacher, and he says, follow the charts, not the farts. And I completely agree with him, because if you follow the charts, you see what's happening. And other charts also say that. There's a market sniper who also says that, like, don't just follow what's being said in the news. See the chart tells the truth. The chart is the footprints before you get eaten by the lion of the market. So anyway, so I've been saying this because of the charts, and now what I'm seeing in the charts is that the commodities super cycle is beginning. It's beginning now, and I totally mean it. Some people are saying, and you know what, this may be true in the very, very, very short term. And when I say very short term, I mean, like, from like now till say March or May or so of next year. March or May or so of next year, you may see paper prices of commodities come down even more. That's true. However, you will not be able to actually acquire physical commodities for that paper commodity price that you think is going to happen in, say, March or May of next year. And why do I say that? Because the paper market, which is all based on derivatives and all, and the actual physical market, they have been so badly decoupled lately, and I suspect that will only get worse when it comes to the whole derivative default, bond market default that I see happening very, very shortly. Now, just like I said in my January video about, like, okay, I think it's going to be deflation, not inflation, but the caveat is if they go to war. Same way, I will say my caveat to what I'm just saying is this whole, like, bond default thing. Well, the bond defaults will happen anyways, and the market, that commodities market is, like, done. But an obvious break will not occur. My caveat to that is it'll only not occur if they do the CBDC, central banking digital currency. Why do I say that? Because if they do, and when I say this, I'm not pro CBDC, just so you all know, okay? I made a video about that. It's called, I tried to call it CBDC Con and Pro, but then YouTube did not like that title and had me change it because they're just, not uploading for 8 hours. Talk about like soft censorship, behavioral psychology. Incredible. Nice job, YouTube. So I called it CBDC pros and cons, or cons and pros, something like that. But central banking digital currency is not Bitcoin. Centralized finance is obviously the opposite of decentralized finance, which is what cryptocurrency is. That's decentralized. Centralized banking tokens are tokens, programmable tokens. They're like coupons, okay, made up and issued at will by centralized authorities, whether that be governments or central banks, which are lately functioning just as wings of the government, or rather the governments are functioning as wings of the central banks, more accurately. So central banking digital currency tokens are programmable. They can be turned on and off based on behaviors, based on the nice words for it are certain conditions being met, such as a person is dead, their bank account gets turned off. What does that mean? Their descendants get nothing. That's what that means. Yeah. It like completely destroys any reason for people to want to stay motivated and work and be productive and all of that. However, they will try first, and the people will vote for this shit. We will vote for it to become programmable. Why? Because first they will say, we will only give out handouts for this, if somebody wants to take unemployment or whatever, we will only give out only those people will get paid, only stimmy check things, or only this. So they'll give it to you like, here's your subsidy, and it's only usable at the gas station. It's only usable at for food and for certain things, not for alcohol and this and that. And we the people will say, yeah, vote for this. What the hell, like you're taking our taxpayers' money, you shouldn't be allowed to buy whatever crap you want. So we will vote for this, and then it'll be used later against us. You see, that is the issue with all of this stuff, that it always starts out as something that we the people actively give up our rights for, and then we get screwed and stabbed in the back with the same thing that we said yes to, and that's just the way it goes. But anyway, so I said my caveat to this outright default that I'm talking about is that if this central banking digital currency thing is put out, and I think it might get put out. So therefore, people who are not exactly aware may not see this thing unfolding as a massive default. However, suppose you put $10,000 in a bond, and the minimum precondition of a bond is that the principal remains stable, and you get back 6,000 instead of 10,000 that you put in. Then you tell me, haven't you just lost 40%? Doesn't that mean that it's been defaulted, so to speak? Now, you may not think that, because you may think that, hey, after all, I was the one who signed up for it, right? So you may blame your own self for that kind of thing. But that is not, in fact, that is a soft default actually. That is actually a soft default that is occurring before our very eyes, and people won't even, they'll just blame themselves, because because that's what good responsible people who do what they are told and do a 60-40 allocation, that's what they're most apt to do, blame themselves for this thing. However, I would like to posit to you the idea that 40% of a drawdown, of a decrease in your portfolio of bonds, which are actually supposed to be risk-free, that's a joke, that's actually a bond default. So just think about that for a moment, okay? But anyways, most people may not see it that way. They may just blame themselves, as I said, and then this sort of feeling that some people have that, gee, I'll stay in the market till the very, very end, and then, like, I just had this experience actually last week at the children's school. A mom who found out that I invest in stuff. She's like, but wait, you're saying it may go up till Christmas time, and then so I'll buy now and I will hold till Christmas time, and then because you're saying it will go down in March. I was like, I think you missed the memo there. Okay, fine, you do you. If you want to lose money, go for it. I'm not going to tell you no, but imagine, what if the exchange is shut down? You cannot trade, and people say, oh, this is America, like the exchange is not going to be shut down. But I would like to quote Jim Rickards. He says, shutting down an exchange is as American as apple pie. And there have been years when the exchange has been shut down. People just don't think of that. Hi, doggo. People just don't think of that. So there's a whole lot of things that can happen capital controls wise. There could even be a technically a so-called hack that is blamed on somebody else, just because it is not advantageous for Wall Street to have anybody trading at that time. So there's all those kind of things that can happen. So therefore, I guess it's a long ramble for me to say that the commodities super cycle is beginning now. I'm seeing it in the charts. It is so clear. Like, if you know what to look for, which is like the gold to silver ratio, the rising platinum prices. If you are a trader, if you are even an investor in like the paper game, it's starting now. And sure, it may go down in paper. It may crash again in March, between March and May. However, if you're looking for the long haul and you're interested in commodities specifically, I think this is a good entry point. And if you want more details on like what exactly I'm talking about, what exactly I'm recommending strategically, etc., just leave me a question in the comments and I will answer that on my next drive. Okay, take care. Thanks everyone for listening. Bye.